Hello guys, this lesson is going to be on top-down analysis. And when I say top-down analysis, I'm talking of analyzing the chart from the monthly to the weekly to the daily, all the way to the 4-hour chart, okay? And so this is volatility 75 index. We're going to do a top-down analysis on this instrument. And as you can see on the monthly chart, there was previous manipulation up here of this high. And then there was a break of structure of these lows, right? Broke this low and broke this low. So clearly we can see that price action on the monthly chart is bearish, order flow is bearish. And as you can see, price pulled back to this mitigation block. It is also a flip zone because it reacted to this bullish order block, failed to go up and then broke down. It was a very powerful area. And as you can see, as we broke down, price returned to that area and sold off one more time. So there is a second break of structure right here, as you can see. This low broken. So clearly, monthly chart is bearish. So let's look at our premium and discount levels on the monthly chart. As you can see, price has retraced very deep now. So taking our Fibonacci, consider price has retraced all the way to 50% right there. So around 50% or above 50%, we should identify our institutional reference points. And you can see that there is this order block right there. You can see that price has traded into that order block and it has started to reject, right? Okay. So we know that our order flow market structure is bearish on the monthly time frame. So for a longer term bias, price action is bearish. Okay, so you should keep in mind that your longer term order flow is bearish. Though the daily or weekly might be bullish, but your longer term order flow is bearish. And at any point in time around this area, price can turn around on the daily and weekly to then attack the lows here. So you should keep in mind this idea. Now let's go to the weekly chart, break things down. So coming down to the weekly charts, as you can see, this is the order block on the monthly chart that I marked, and I'm going to refine it to this breaker block here. Okay, I'm going to refine it to that breaker block, but we can mark some more zones. So now let me get rid of this level and concentrate here. We also have this order block here. They are all possible areas that price can use for continuation to the downside. Okay, now there is this fair value gap here as well. Let me get that. So there's a fair value gap there. So now, first of all, price has traded into the breaker on the weekly chart, also on an order block on the monthly chart. Okay, and it has started to reject. But as you can see on the weekly chart, clearly the weekly chart has shifted bullish right here. Clearly it has shifted bullish, right? So even though we are looking for sales around this area, we should understand that the weekly chart is also a higher time frame chart. And so if the weekly chart is bullish and price has retraced into discounts, okay, we want to see if price can break through and go down or react and come deeper into these levels. So we should be aware of that. So you mark this rejection block on the weekly chart. As you can see, price came to it and reacted nicely. So marking that rejection block, price came to it nicely, gave a very nice reaction. Though we are bearish on the monthly chart, the weekly chart is bullish. And if weekly PDRAs are still being respected, it means we can come deeper into the monthly levels. Okay. Yeah, so we have to be very critical in thinking where likely price will go. But we shouldn't disregard the fact that we've also traded here and price can just give a failure swing here and go down. But the daily and the 4-hour charts will give us insight as to what price wants to do at the moment. Okay. Yes. But the longer term bias is being determined on the monthly, shorter term on the weekly, And then intraday charts can be on the daily and then the 4 hour. So now we know that monthly is bearish. Price has pulled back to 50% of the monthly range into a monthly order block and rejected. But weekly is also bullish at this moment. And as it rejected from the monthly chart, it also respected the weekly PDRA. Very nice bullish movement around the weekly PDRA, which could signal a potential deeper retracement into the monthly levels. Because you have a fair value gap here, you have another block here. Yes, that's possible. So now let's go to the daily chart to see what is happening. As you know, the daily chart is what we trade. That's where we focus most of our analysis on to determine our daily bias. Okay. So now, is the bias bullish to these deeper areas or is it bearish to these lows? The daily chart will give us insight. Now let's go to the daily chart. And as you can see on the daily chart, price action is bullish, right? Price action is bullish. So I would stick with the fact that price wants to give a deeper retracement into the monthly levels. There is even a fair value gap here as well. A deeper fair value gap up there. Okay. So these are all potential pullback points too. Since the daily chart is bullish, as I said, the daily chart is what we trade for our immediate intraday bias. So if it is bullish, we want to be focusing on it, right? So yes, that's the break of structure on the daily chart. And as you can see, the daily chart is also respecting institutional PDRAs. Fair value gap here being respected. Price pulls back, respects this rejection block. Now this rejection block is a nice order block on the 4 hour. When I get to the 4 hour chart, I will mark it out. So this was the weekly rejection block. You can refine that weekly rejection block to this order block. And as you can see, there was a nice reaction from it. We broke structure up here. After the weekly rejection, broke structure up here, right? And pull back to this fair value gap. So clearly we can see that the daily chart is also bullish, respecting bullish PDRs. Okay. So though our longer term bias on the monthly is bearish, we can't trade against the daily chart and we can't trace against the weekly chart. Okay. And so if I will look for sales, I would like to see the daily chart turn bearish before I look for sales. As in this area, when price first came into the monthly level, you could see there was a break of structure down here. Price pulled back, broke structure one more time. So you could have taken sales from all these levels. So we hit the weekly level. And since the weekly level is bullish, we don't know what will happen. Either you violate it or respect it. Once it gets here, you stay nimble, get out of your positions, and see what price does here. And price has shown us or given us indication that it wants to push up a little bit more before any downside movement. So you can see that I rejected broke structure here, pulled back, respected fair value gap, broke structure one more time, respect fair value gap. So institutional PDRAs on the daily chart is being respected. The daily order flow currently is bullish, and it's ideal that we look for what bullish price movement, right? Let's go to the 4 hour chart where we can have immediate bias, okay? And clearly, after price, so this the rejection block on the daily chart. Let me go back to the daily. The rejection block on the daily chart, when you go down to the 4 hour, it's a nice order block. Go back to the 4 hour chart, you can see clearly that that level is a nice order block. And price has pulled back to it, respected it beautifully. Okay, respected it beautifully, reacted, broke structure. Order flow has been established bullish on the 4 hour chart. The clear break of structure here. Anchor it. Clear break of structure right there. Price pulls back into this rejection block. On the 1 hour chart, that rejection block is an order block. So price pulls back, respect it beautifully, break structure one more time. So order flow on the daily chart is bullish, weekly chart bullish, 4-hour chart bullish. Okay, so you can't trade against this order flow at the moment. For the weekly is bullish, daily bullish, 4-hour bullish, but the monthly is bearish. So we can trade for we can look for buy setups to go deeper into the monthly levels before we start looking for sells. We can look for buy setups deeper into these areas. Okay, and since daily, weekly are higher time frame levels, just like the monthly level, there is nothing wrong trading the daily order flow against the monthly order flow, and there is nothing wrong trading the weekly order flow against the monthly order flow. The only wrong thing to do is to trade the lower time frames against your higher time frame direction. For instance, trading 1 hour structure against the daily order flow. That one is bad. But since daily, weekly, monthly are all higher time frame levels, once order flow is established there, you can follow that order flow and then you will be good. So now, as price is pulling back, I say that it's pulling back inside this fair value gap, and there is an order block here, right? So I would like to go with the order block. It's for a reason, because this level is an institutional level. You can see that we took liquidity above this high and broke down. And so though we are bullish, we are getting a very strong reaction from here. So probability that you have a deeper pullback into this 4-hour order block is high. So I'll be waiting for price here. Okay, but we shouldn't also disregard the fair value gap. We have a fair value gap there. So I'll be waiting for price around here. And I would like the 1 hour to support the bullish idea that I have. Okay, so if price is able to get there and give me something on the 1 hour for a bullish confirmation, I'll take the long and I'll hold it all the way for my first profit of this at this high. Then I'll leave something on for the rest of the month to see if we can get deeper into these areas. Okay, so this is how you do your top-down analysis. Now let's go to the 1 hour chart to see structures that are forming inside this range. Yeah, you can see that currently the 1 hour has switched bearish. So when price hits these levels, it's not advisable to go aggressive. You can simply wait for the 1 hour to turn around. Okay, so I can limit my point of interest to this little demand level, that indecision candle. It's my point of interest, but there is no fair value gaps down here. That's what I'm interested in. So as price hits these levels, I'll start looking for confirmations on the 1 hour chart to buy this with 75. So yeah, possible scenario for this trade. Okay, possible scenario. I say that institutional reference points are being respected nicely. Okay, very nicely. Yeah, so let me quickly refresh your mind on what I just described. So we look at the monthly chart and realize that monthly has taken liquidity above this high, broken structure to the downside here, pulled back and respected this nice order block. That's a nice institutional order flow. Broke down one more time, breaking this low that you see here, leaving behind a fair value gap, leaving behind an order block, right? And so once price has pulled back to this level, we expect price to react, and it reacted nicely, give some sells, but clearly you can see that you can see that clearly price respected the daily order block and sold. But since the weekly is still bullish at this moment, when we get entries from here and we sell, we should make sure that we take our profits around the weekly levels, because we don't know whether the weekly level is going to hold or not. Because mind you, the monthly is not going to sell forever. At some point, the weekly will take over and cause a monthly break of structure to be bullish. We don't know when. So we should take our profits here and be out to see the reaction that happens here. If you break through it, then you can go for more sales at a pullback. But once it respects this and starts to break to the upside one more time, it means price wanna go deeper into the weekly, into the monthly levels that have been refined on the weekly chart. You have another block here, fair value gap here. So the breakup block has been used. So more PDRAs. So once price has hit here, you want to see if the daily chart is supporting this weekly bullishness. So you go to the daily chart and you can see clearly that the daily chart is supporting the weekly bullish idea. And you can see that institutional order flow is bullish. PDRAs are being respected. Bullish PDRAs are being respected. Fair value gap respected. Broke up. Fair value gap respected. Broke up. Fair value gap respected. Now we are looking for short-term intraday trades, right? So once we've established our higher time frame order flow, with the weekly and the daily is bullish, the idea is we want to see if price can go deeper into the monthly levels because the weekly is supporting that idea. Okay, because though we sold from here, we couldn't continue being bearish. The bearish order flow was broken once again to the upside by the weekly levels, signaling to us the possibility of price wanting to go deeper into the monthly level is high. Now the daily supports that idea. 4-hour chart also support that idea, right? So all we are waiting for at this moment is to see price pulls back to this area, pull back to these areas. We look for confirmation on the 1-hour chart. The reason why we are going to look for confirmation on the 1-hour chart is because 1 hour has broken bearish at the moment. And so we would like to see a confirmation on the 1-hour chart to support 4-hour, then we take our trades. And this will be a high probability trade because weekly is in line with the daily is in line with the 4-hour, and then when 1 hour also gets in line with the 4-hour, very high probability setup. Okay. So we will be having more top-down analysis lessons. I'll be recording once in a while to send to you guys. So this will be all for this particular lesson.